Ken, first off, just give me your reaction to those numbers that we got this morning.
I'd say not a surprise. We do track a lot of these sales. So 2 days ago, we did our Zener report showing existing sales down 4%, inventory down, and actually pending sales for May are set to fall roughly 13%. So not good.
Not good. All right. You have made the point, obviously, in terms of your research that these stocks don't perform particularly well during past Fed tightening cycles. And that clearly has already been the case this year. How much further do they conceivably have to go?
Good point. Well, in our analysis in January, we said 30% downside is the average. We didn't highlight recessions. And I would just like to point out several problems with the bullish narrative that's slowly fading. First, we really have disagreed with the idea that supply is tight on the existing side. Why? While you see inventory, visible inventory, month-end units down, people often forget that days on market, the efficiencies actually offset it. So sales are above 18 and 19 levels, with down inventory offset by the efficiency of days. Second, the demographic narrative. There's young people. Look, everybody that wants to buy a house is living in one, so they're expensive. And that's why our wall of worry thesis points out that the stocks don't work until the last work, meaning the stocks generally don't bottom until the last quartile of the Fed tightening cycle. And with the Fed funds rate at 75, the 2-year, which is a good proxy for where it should be at 260, there's a long ways to go, Dave.
Is that true, Ken, that everybody who wants to buy a house is living in one right now? Because I think I saw a survey out of maybe it was Bank of America yesterday that said that 50% of millennials are homeowners, and then 2/3 that aren't would like to be soon. They're just waiting for kind of the market to normalize. So do you think that things have normalized at this point, that people have, if they want to live in a house, that they're in one, and that's kind of that next marginal buyer it's decided?
Good question. So, a house doesn't need to be a single family. I mean, they're going to sleep somewhere unless they're homeless. I want a yacht, but, I don't have one. So the reality is the incremental buyers are increasingly pressured. And what's really important to look at, which we do in our Zener report, is you need to realize the majority of new home buyers, new homes that are constructed, are in fact existing homeowners, as we saw in 05, 06, as we saw in 89, as we saw in every cycle. If you can't sell your house, it's hard to buy a new one that's constructed by the new home builders. And with their inventory units up 30% year over year, demand could be an issue as they bring these units to market. I think we have a price ceiling. And in fact, that's why we're negative on the builders, despite historically attractive valuations on price to book, which some are below, some are right above. But the reality is, with price set, they're going to have to give up that land value to meet those incremental buyers to churn their inventory to get cash flow. And that's the fundamental issue that people are going to have to grip with in the coming quarters.